Today, I want to share the importance of understanding institutional order flow, how to spot institutional order flow, and how to really trust your bias and stick to your bias and not get caught out, not miss trades or miss opportunities based on things where you just trick yourself into not taking the correct entry. So I want to share an entry today from Eurodollar. In all honesty, I did not take this trade. This is something that I personally missed, and that's why I wanted to share this topic, because I personally tricked myself into not taking this trade, even though it was one of my setups in my trading plan. So I really wanted to share that today. So let's start on the 4 hour. You can see that price is bullish, and based on our last video, if you want to know how I draw a trend, you can watch the last video, but I will share a quick thing about that again. So what you see is this movement from A to B. So basically you have this downtrend here, boom, boom, we break structure. So where's our high? Here. And where's our low? Here. And then we get another break of structure. So where's our low? Here. And where's our high? Here. And this is what I was talking about the other day on the other video. If you haven't seen that, check it out, about why I do not consider this a low, or why I don't consider this a low. Because a lot of people might think, oh, okay, no, price is bearish now, and they might be looking for shorts. But in reality, price is still bullish. Why is it bullish? Because again, look at the institutional order flow. You can see that price is bullish. And a lot of people get confused with this strong bearish candle. And as I said in the video yesterday, there was a sell from here down here because we wanted to see a sweep of liquidity to then go higher. Which what happened again? We got another sweep and then we went higher. And so sometimes they will sweep multiple times before going higher and trick people onto the wrong side of the market. So let's go to a 15-minute. So price is bullish from the 4 hour, as we said. So we're looking for longs once we come into this area. And then I wanted to refine this zone, right? So where are unmitigated zones in here? And these are the two levels I have. I have the edge. This is unmitigated, right? Sell to buy. And then there's another level within here, which is this sell to buy. So I had this level marked out as my refined area. And I believe I had this as either a 30-minute or a 1 hour. I think it was a 1 hour, let me see. Yep. So 1 hour sell to buy caused the break of structure. So this is the refined area I want to see within here. I want to see price tap. So some people will get confused because they would see, okay, cool, on the 15-minute. They'd look, okay, cool, we're bearish, right? And they'd be thinking we're bearish, or maybe they, look at this, and then now we're bullish, right? Because we do go bullish here for a minute. We go bullish, but we wick, and that tells me that it was either we are going to go bullish and we could look for buys here, but it's less likely because this could also be a liquidity grab. So I knew that, and once I saw price fail to go higher, that's a key thing. So if we just wick it and we don't actually close with a candle close, you have to be thinking that this level could hold, but it's not as high probability. And once you start seeing price doing this and starting to break down again, you need to be thinking, okay, this might just become liquidity for another sweep, because now this low failed to put another high, and typical trend should be like this. And so if we fail to put it in another high, what does that tell you? That this low is likely weak, right? So if we fail to put another high, it's going to come down, and then we're going to fulfill the expectation. So what happens? We see price come down here. And what did I say? This is what threw me off in what I was saying earlier, is I saw the wick close. So I was like, okay, this might just become more liquidity for us to come deeper in the zone. But again, you can still trade the zone. It's just not as high probability, but it is still a really clear level, especially because we sweep liquidity here, we sweep liquidity here. It's less likely we're going to sweep again. It is possible, but it's not as likely. So, and then you drop to the 1 minute. And you see what? Okay, price had this break of structure. What did we do here? We took more liquidity. So price comes down. You see supplies are holding, right? So boom, supplies holding. And then we break the low. What do we do after we break the low? We then rip to the upside. So this is your sell to buy. So this is the level that you're going to use. So I use this whole level. I think it was more clear on the 5-minute. Maybe it was a 15-minute. Yeah, so you see the sell to buy that takes liquidity, and that's a really key thing is we take liquidity. And then we have this MS. What is an MS? It's just a momentum shift. So what you see is this, you see price come down, you see it come up, and then we break the low. So what is this? This is an intermediary high that is broken, which gives you a sign that price wants to go higher. And then we break this level, but with a wick. So it tells me, okay, this is technically could be a liquidity grab. And so I want to look at this level, but I want to see something clear. So I wouldn't just place a risk entry there. I wouldn't just like place my entry. I'd wait for something more. Now there was 2 entries that I personally saw. I'll share both of them with you. There's this one where price comes down. What do? We manufacture liquidity, getting people caught on the wrong side, right? Retail, thinking that we're going to go long here, getting it early, thinking, oh yeah, we're going to go higher, and then we sweep. And then what happens? We see price come up, and then we see it come down and hold. So this is showing BFIs, or banks and financial institutions, are stacking positions, right? And then if you know how to read the 1 minute, I'll go on the seconds in a minute, but if you know how to read the minute, you can see that this is what? This is doing this on the seconds chart. It's stacking, right? So order, and then we see a liquidation. And this is a really key entry. If you get a liquidation, you can enter on that. What does that mean? Price just swept a bunch of liquidity. We're seeing mitigation to mitigation to mitigation, and then we see a sweep of liquidity. You can enter right as we break the high. So actually this should be here. So as soon as we break this high, you take an entry. So once price breaks it, boom, enter, 3-pip stop, and then price runs. Like it just rips to the upside. I mean, today you could have literally taken like 30R, which is crazy. And then you see a second position here. This one's a little bit more clear to me. Why? Because we break 1, 2, 3 things of structure. So it's showing that there's more commitment to the upside. It's showing that price really wants to go higher. And so then you have, okay, what is this? This is a down move before the up move that caused these 2 break of structures. So you have your entry here, and you can just enter straight off of this level with a 3-pip stop. And what makes it even better is in the seconds, you can see that we form liquidity, which is beautiful. So what is this? This is liquidity, right? Getting other SMC traders on the wrong side of the market. This just becomes liquidity, inducement for the zone, and then we go higher. And this could also be an entry that you could look for here. But I personally would rather just take the entry, and then if, yeah, so I'd rather just take the entry, and then some people would be thinking, well, what if price wants to go to the extreme? Cool, take the entry, you take the loss, price comes down here, you either just smack an entry on here, or you wait for an MS. What is an MS? It's just price doing this. It's just a break of intermediary structure. So you enter and then boom. It's not a break of structure like this. So like an MS could be, you know, like this would be the proper break of structure because this is your swing point. So you'd say like this or this. But if we break something like here or here, that's your MS. Which I can go more into MS if you guys really want in the future. But yeah, those are the 2 trades for the day. It's very simple. And the biggest thing I wanted to say was that it's very easy to get caught out and think like, okay, price is going bearish now because of this, right? You're like, okay, well, if price wanted to go higher, it should have gone higher, right? It just you keep seeing bearish order flow, and you could really get caught out and get confused and not really be sure what to do. And especially because we broke here, and now that we have this, and maybe we're gonna go higher, but then we fail to go higher and we break lower, and then we wick this level, maybe we wanna keep going lower. It's very easy to get caught out and look at the wrong bias and forget the higher time frame picture of what is really going on and what price really wants to do. It's following the order flow of the institutions, because typically what you'll see is institutions will like to stack orders in the form of Wyckoff or an accumulation, which basically looks like this. and then we'll go higher. So it's like a liquidation, another liquidation, and then we get a spring, and then price comes here and then wants to go higher. And all this is doing is it's just VFI stacking more orders, and then liquidating, stacking more orders, liquidating, getting people caught on the wrong side while they accumulate more orders. So they're accumulating, price breaks to the upside with no resistance because all the sellers are gone, and then boom, price comes back down, and then we rip to the upside. So yeah, I just want to share a trade from today. If you took some value from this, let me know. If you have any questions, I'm going to be sharing some more videos in the future about more in-depth topics such as like supply and demand flips, how to know what direction to be trading. I'll be sharing some entries that I take, things like that. So yeah, if you enjoyed this video, let me know.